All right. Welcome back to the Real Estate Locker Room Show, folks. I'm your host, John Carney, and thank you for taking the time out of your busy day to join me here. Episode number 2 on Zoom, but we are at episode number 78 of the Real Estate Locker Room Show. I'm truly grateful for all of you return listeners. Your support helps keep this show going. And once again, if you find this content valuable, I would really appreciate it if you would share it with other like-minded people. That's what we're all about. If this is your first time listening to the Real Estate Locker Room Show or tuning in on YouTube, welcome. The goal here is to deliver you some actionable advice on how to elevate your real estate game today. To continue to raise the bar, whether you're supporting the real estate industry or whether you're getting off the sidelines and playing the game yourself. We believe real estate is a team sport. So as I said a minute ago, today's episode number 78, and it's my pleasure to welcome my guest today, Nichole Stohler. And she's also a podcaster and host of the Richer Geek podcast. We're going to jump into a lot of neat things that she's done that revolve around Plan B and the W-2 entrepreneur. So welcome to the show, Nichole.
Thanks so much, John. I am excited to be here.
Yeah, thank you. Thank you for taking the time out of your busy entrepreneurial schedule to jump in here and share your success story with our guests. So, the premise behind the Real Estate Locker Room Show is to have a little bit of fun and, let's explore the intersection of competitive sports and competitive real estate. That was how I founded the show. But generally, you could say a competitive hobby. But do you have any athletes? We break the ice, we stretch out, so to speak. We're talking a little bit about sports, and then we always transition into the real estate game. But do you watch sports on TV or have a favorite athlete or participate in anything?
I support my husband in watching sports on TV. But I will say we're originally from Indiana. We live in Scottsdale, Arizona now, but we are huge Peyton Manning fans and loved his commercials. Just loved that he was a down-to-earth kind of person, yet brilliant and excellent player. So even though he's not active today, that would be one of my favorite players.
You know what's cool? Well, thanks. Yeah, Peyton was great to watch. And I grew up a Cleveland Browns fan, so I've checked out of the NFL in the mid '90s. But hey, look, Peyton was great, and you know what? It's the athletes that are able to transition out of their sports career and into the business world, and I think he's done a great job. And he's got a great personality and great role model. Okay. So you support your husband? Do you have any activities that you participate in that require a little bit of discipline and focus?
I used to be a runner, and I would run in 5Ks with my dad, which was an awesome thing to do as like a father-daughter kind of event. Today, I don't do that as much. I do work out with a personal trainer, and kind of to what's the lesson learned there is that it is great to have someone who's critiquing you and giving you advice and guidance so that you can raise your game.
I love it. And yeah, so whether it's a coach or a personal trainer or a mentor or a business partner that knows a little bit more than you do, always helpful to have someone in your corner, checking out that you're doing things the right way. Awesome. Well, that's cool. Thanks for sharing that. So you've got a great success story here. You're in the tech industry. So why don't you just explain a little bit to the audience how you discovered real estate and, where the journey has taken you from the beginning to date?
The question starts with probably what you hear from many, many people. I read Rich Dad, Poor Dad. That book is such a catalyst for investing in real estate. In our case, my husband and I both read that book in 1999. So this is like when it first came out. and we got super excited about real estate investing. I would say too that nobody in our family had an entrepreneurial mindset. Everybody went to go work for a company for years and years and years. The whole concept of making your money work for you was just very eye-opening for me. And obviously in the book, Robert Kiyosaki talks about real estate or a business. Real estate is a business, but also, he's not saying 100% it's exclusively real estate, but he's got a heavy emphasis on that. And I just was so intrigued by physical property and something you could see and something you could tangibly value. So we were gung-ho. We got started, had no idea what we were doing, and failed. So that's our original how we got started story.
I read that book too, and it was a similar experience. And I was fired up. The difference was that I grew up in the real estate business, but decided I could do it on my own, and it must be easy. And had a few setbacks, monetary setbacks specifically. So I feel your pain, but a lot of people reference that book. And look, if you haven't picked it up and you're tuning in, get over to Amazon. It'll be there tomorrow, and understand what it's all about, because that is the bet. He was able to simplify something that has really become, the go-to book to get people into a whole new, a whole new frame of reference, a whole new mindset towards real estate and creating wealth. But so you got into it, you started. You may have had a setback, but you certainly didn't quit. So, talk about the evolution from, over the last 20 years to where you are today, please.
So the interesting thing is all of the reasons we failed in that very beginning. I actually signed us up for a real estate seminar. We went and we learned about creative strategies for buying property, which was a great seminar to start with. And we came back and that's what we did. We creatively bought property, but the pieces that we're missing is we didn't actually know how to fully value the property. We didn't know how to manage residents. So there were a lot of other pieces that were missing. So after that failure, what we said is, okay, look, we are committed to this. We still want to do and be in this business in some way, but we just need to learn. And again, this was an early time frame where there weren't a lot of, there wasn't online support groups. There weren't all of the kind of resources that are available today. So my husband went to go work in property management for a large apartment complex developer that then managed their own properties. So he learned the ropes, so to speak, around managing residents and optimizing expenses and increasing revenue and raising rents and right kind of lease agreements and all of that in like a 400 to 600 unit apartment complex range, because he would get promoted and move into different spaces. So while he was doing that, I'm still working in my full-time tech job, basically saving capital to be able to go and buy our own property at some point. And our goal at that point in time had always been to buy a small apartment complex. Now, some things kind of transferred along the way. We were in Indiana buying an apartment complex in Indiana versus now we live in Scottsdale, Arizona, buying an apartment complex out here. You're talking about very different price ranges and a lot of other factors. So we weren't heavy into really a lot of our own investments. We had a few single family homes until about 2010, and we started pushing it really hard. And we had enough capital then also to be just doing our own deals, getting into small apartment complexes, and then rolled that in 2016, moved into hotels.
Whoa. That is a whole different category, isn't it? And I only say whoa because it's something I'm unfamiliar with, and I don't know that we've deep dived into hotels yet on this show. So I'm excited. So you did multifamily. That's sort of the area that I suppose I live in day to day, multifamily management. And the ownership management development component. But I know some people that are in the hotel industry. what drew you there, and what was the entry like?
Yeah, so that's a great question, and it kind of goes back to when you talk about team sports, and there's another piece in real estate investing, which is the power of networking, right? And building your network and developing mentors and finding peers that are doing the things that you want to do and learning from them. So we had been, in the apartment, small apartment, sub 100, so like 50, 28 unit, that space, again with our own capital. And we were talking with our broker, and he suggested that we meet with someone he was working with actually to find land to build a hotel. So he just felt like we would hit it off. And we absolutely did. We had many conversations. We were considering investing either in that new build or some other projects that he was working on. And we didn't do anything at the time. It was just kind of, we were looking at options. We were very intrigued by the hotel business. We were intrigued by the numbers, the returns, those types of things. And in 2016, we received an unsolicited offer 3 times for one of our apartment complexes, someone else under 1031 exchange, really anxious to buy this property that we had. So the challenge that we ran into is, okay, now we accepted that offer after the 3rd time, and now we were under 1031 exchange. And one of the things that we have always focused on is we stay local to our market. Now, we do have management and systems and teams in place, but we want to see it. We want to know what's going on. We have our pulse on this market. This is where we want to be. And we could not find an apartment complex that met our investment criteria. So we called up the gentleman that we'd met, a few years earlier, and we said, do you know of any hotels that would make sense and that we could take a look at? And he had, through his relationships and his networking, was aware of an off-market hotel opportunity. So we looked at that, evaluated it, vetted it, and then we brought him along with us. So it's 100%, we own the property, but we brought him along with us as a partial partner because we didn't know anything about running hotels and we were going to need that help. And I think there's huge value in when you find someone that's got expertise, partnering with them in some way. And he brings a tremendous amount of value around, how to find the right property management folks, how to run the day to day.
So, yeah, I mean, the team, right? And I mean, so real estate being a team sport, if you really have to drill into the quarterback, it's the key player, so to speak, whatever team sport analogy you want to use, right? The property manager, the person that understands that management component, that can then get that secondary team in place to for sales or leasing, whatever it might be. So you transition from multifamily into hotels, and then and you went at it. You acquired a property on your own, and then had to manage it on your own.
We had the advantage of that gentleman that had 20 plus years of hotel experience.
That's nice. That would have given me a little bit of comfort.
Exactly. I am actually not sure we could get a loan, or that it's a branded hotel. It's called a flag. So yep. I'm not sure that we would actually even have been able to be approved for the franchise agreement without having someone who had that expertise. So, when you talk about in the multifamily space, if you were bringing in an experienced property management company to help you in maybe your first larger type of deal, same kind of thing, right? You've got the bank, the underwriters are looking at it and saying, okay, you've got someone who has the experience and the expertise. And in our case, that's the role that he played with that particular hotel.
That's great. And that was, like about 2016-ish, you said?
2016. And then we are now under contract for a second hotel. It's actually the first time that we're doing a syndication for a hotel. Yeah. And now at this point, obviously over time, our expertise, our knowledge, what we know, what systems that we're bringing into place his level, he's still involved, but it's a smaller level. And then there's more involvement that we have as part of the syndication.
Well, that's pretty cool. I mean, and I say, like, congratulations. One of the common, they say success leaves clues, Nichole, and something that that's a common thread question, right? You could probably look back like it was yesterday to picking up Rich Dad Poor Dad, because I know I can, and a lot of people do. But I mean, it was a little while ago, and you got into single family homes, and then went into multifamily. Now you're into hotels or different commercial asset, and that seems to be a relatively common thing I hear, where people might be getting their first duplexes in college, after college, right? And I suppose I have this belief that unless you've been painting something that you're fixing up to or improving a property for a tenant, and you're under some type of time pressure to satisfy that tenant, to get the money to pay whoever lent you the money, right? I mean, that those experiences do count when you get up to playing the larger game. So is there anything about the hotel real estate component, or owning a hotel and having a franchise partnership with a flag that you would say you absolutely love, or you absolutely think, obviously you like it, you're doing a second deal and you're raising capital. So what would someone who says, wow, that's something I've always wanted to do, and now they're cranking up their dial to hear the next the next bit of information, what advice do you have?
Well, a couple of things. I would say that a lot of the fundamentals are the same, right? The location's absolutely key, the economic drivers in the area. You don't want to build or buy an apartment complex in the middle of nowhere. You want to make sure there's jobs available. So there's a lot of those kinds of things. You're also trying to look at ways. So we have not actually built a brand new hotel each time. These are existing hotel assets. And in that case, we are looking for the same kind of value add to force appreciation that you would also be looking for in multifamily. But the difference is the way you add value. And because you're talking about branded flagged hotels, at least in the spaces that we're in, which is called limited service, meaning that there are amenities, generally a pool, free Wi-Fi, free breakfast, but we don't have food and beverage on site. Like we don't have a kitchen or a place that serve a bar, those types of things. So not the full food and beverage service. So in that limited service space under flag brands, you're generally not going to find a hotel that's run down. I mean, maybe, but in our case, really, when we talk about the value add, it's adjustments to the interior or the exterior, right? So kind of updating the property itself. It is ways to increase revenue. And so we're looking at that same, to compare the two, that same kind of, can we get it at a great price that we know that we can then force the appreciation and increase the value? Now, the things that are different and why we like hotels specifically, there are more levers that you can pull to generate revenue than you would, for example, in like a C-class multifamily property. And that would be everything from, you can monetize the hotel space in a lot of different ways. There's digital assets you can monetize. Like, for example, you stay at a hotel, you get on the Wi-Fi, there's a page that comes up, right? It says, what's your room number and what's your last name? That page is digital space. You can sell local restaurants advertising to be on that space, as an example, because we don't have a restaurant at the hotel and people might wonder, well, what's close by? You can sell events. You can create packages. We're in Phoenix, Arizona, lots of golf courses. We can create golf packages. We can, an example, this hotel that we're looking to buy right now, it's kind of run like a mom and pop hotel. And there hasn't been a heavy emphasis on going out and securing corporate contracts. And there's a lot of business travelers in this particular area. So that's a huge focus for us is, okay, let's set up those contracts and look to make sure when people are booking travel to come for events and training, they're staying at our hotel. So there's a lot of different levers that you can pull to increase your revenue. And of course, a lot of things you can do to reduce expenses. that you don't have as many of those in multifamily space.
Yeah, I understand, and that's so you're operating the property, and so your rent, so to speak, is it's just like maybe it's a bad analogy, Nichole. I don't know, like you've got multiple Airbnbs in one place, right? Prices do change. You have your staff. That's sort of a fixed budget line item, like you would in your maintenance, right? And all of that, right? And then when you talk about the levers, like what are some levers that if you found any levers that in the hotel industry that can be applied to something like a multifamily, an A, B, or C class, or mobile home parks, or even someone who has single family homes? Is there something that you've learned through this experience that you find applicable across the board that people just might not be thinking about because they haven't had your experience?
Yeah, so that's interesting. So thinking about hotel opportunities and then how to apply them into the other spaces. Well, I do think maybe in a multifamily apartment complex, the advertising opportunities with the local community could, depending on the client mix or the resident mix within the multifamily property, could be an opportunity. Now, in multifamily, though, there's different ways that you can increase your revenue, right? With you can either, one of the big things that we saw a lot here in Phoenix is add a stackable washer or dryer, right? It takes up a very small space. People love the idea of not having to go downstairs to a laundry room or to, some kind of centralized place at the end of the hall. And now you can charge more for rent for those units. In Arizona, very sunny, which I love, but also people want to have their cars be undercover, and you could add those kinds of spaces, and then you could charge a premium for people to use those spaces. So there's a lot of things you can do in the multifamily space that now that doesn't necessarily translate to hotels. I don't think that we would be charging more for covered parking, but because we're offering these amenities, so I think you could do it in Airbnb for sure. You could start to do some of these same kinds of things. As an example, you offer free Wi-Fi. Absolutely. It's kind of a given. But have you ever been at a hotel where they offer you a faster option, more speed, and you pay to upgrade for that? That's something you could probably do in Airbnb as well.
Huh, that's interesting. Well, I say that because, yeah, man, like internet providers on a multifamily level. I mean, now you're talking about a utility, and we're looking at the best package available in our market right now, and it is going to be neat if we can get the technology in this older building and the stars align. But we're working towards it, and that's just it. I mean, there's a margin to be made on charging our tenants, our residents, and we really look at it, what's the best value we can give them. This would be very high speed, 300 by 300, but they'd have what's called a credential where it works anywhere on the property, for them and X amount of people who might be visiting them, right? So I mean that's always a good one. But you stay in hotels occasionally, you think about the business. So it's really just, a pleasure to have someone who's in the business and can share some of these insights. Is there anything that drives you crazy about the hotel business?
I don't think anyone loves franchise fees.
Okay. Yeah.
I think, but there's value in the marketing and the services that those those branded companies offer. So, but no one wants to pay those fees. So I would say that's a piece. You could absolutely open or buy an independent hotel, but it's tough to compete unless you have such a niche location, right? Or just a niche piece about that particular boutique hotel or independent. It's just hard to compete.
Do you get so? I mean, you become partners, I would imagine, with the franchise company. Are they on terms like a commercial lease terms where you could part ways? Then you might have to find another flag or franchise. Does that pose risk to you as the owner or the operator, that there might be some type of lag between, or some type of unresolvable point of difference? Or is that just business gets worked out and the guests pay your rent, your mortgage statement?
Yeah, that's a great question. I think what we have seen most commonly is that the brand decides on a new standard that they would like. And let me give you an example. Maybe they've decided that they don't want any hotels that have exterior doors. Maybe they were okay with that 20 years ago. Hotels were built under that brand, and then they had, the outside entry into the rooms. And then they decide they're changing their brand and their model, and they don't want that for that brand anymore. At that point, then the hotel owner isn't going to be maintaining that flag. They have to go find a different flag. So yes, there is that transition, but it's also an opportunity then to meet with different brands, decide which one you like, and determine, what's the best path forward. The hotel that we are right under contract is actually a little bit in that transition. It was originally one of the Marriott brands, and then they decided that they wanted really to have a certain age. So this hotel was beyond that age, and now it's moving over to a Radisson brand.
Pretty cool. Well, I mean, we just touched on this. I mean, and we'll kind of move on to the close up. But is there do you find now that you've gone out and you're pitching for investor dollars to syndicate? Did you do any syndication in the multifamily space?
No, we did not.
So this is your first syndication, and what is the reception like? So what is the return? Is it similar? If an investor's out there tuning in saying, all right, we have multifamily and they might not be sold, but here's an opportunity for hotels. That might be something. They travel a lot. They love hotels, or always wanted to be in a hotel. What's the experience been like for you hitting the road, or are you posting events? How are you, however you're going about it? What have you learned through that process for this next deal coming up?
Yeah, the syndication process has been very interesting. The legal paperwork, all of the pieces, lots of moving parts. Actually, right now, it is a 506c offering, so I can talk about it. It's for accredited investors. Okay. But what's interesting is all of our investors are people that we know within our network, either people that belong to the same club that my husband's a huge golfer. So either people there, or people that we know through work, those types of things. So it's kind of been interesting. It's not like we've been doing a road show and talking with a bunch of folks that we don't know. So the reception has been really great, because these are people that know what we've been doing with the other hotels and have a really good understanding. So I would say that the numbers that you're looking at. So first of all, we're purchasing the property at almost an 11 cap. It is in a great growing area. So one of the things that we focus on is making sure people understand what those economic drivers are, where the specific hotel is. There's also limited build out. So we're not in an oversupply situation in the area. So that's an important thing to look at as well. And the IRR is just shy of 18% and a 2.5 multiplier. So those are the numbers when you look at comparing to multifamily.
Yeah, I could imagine how that would be attention grabbing, because those are good metrics. Awesome. Well, thanks for sharing that. And when we wrap up, I like to just kind of dig into a little bit of the entrepreneur side. Anyone in the real estate game, in my opinion, has that entrepreneurial itch that they're scratching, and that drive, because, it's frustrating at times, but it's rewarding as well. So, we started with Rich Dad, Poor Dad, got you started. Is there a book you've read recently that keeps you going?
Yes. Someone I interviewed on my podcast recommended How to Be a Capitalist Without Any Capital. I actually looked over because I've got the book right here. It is. So you got to take a little bit of a grain of salt. The gentleman who wrote the book is young, and there's some things that he does that maybe don't apply to our age, like Instagram followers and this kind of thing. However, he's got some really creative strategies. So I think it is a great read, at least in mindset.
Awesome. Yeah, we'll put that on the reading list. I mean, are you a reader in general? I had to put a stop. I've got 4 books sitting on my nightstand, all in various levels of completion, different genres. But yeah, thanks for sharing that, because I know that people tune in and do pick up these books. So that's great. We'll put that in the show notes for sure. Do you have you've been at this now for a little bit. Do you have a daily practice or a habit or something that you do that really helps you get focused?
Yes. I'd say 2 things. The first is I use a planner. It's actually Michael Hyatt's planner called the Full Focus Planner. And it's interesting. I don't use it in the way that he has videos and demonstrations on how to use. But what I like is the way that it's structured. Each day has the top 3. And those are the top 3 things that if you, at the end of the day, you accomplish and nothing else, those are the ones that you know that you've done what you needed to do that day and you can feel good about it, because otherwise there's just a lot of different things coming at you. So that's the first thing. So that's old school paper. Second thing is that I use an application called Todoist, and you can use the free version, and I just love it. So there's a mobile app, there's obviously desktop app, but the best thing I think about it is integration with your email. And then if you're the kind of person, which I am, where email starts to become a to-do list as well, it's like a follow-up and people I need to check back in with, you can use that and you can easily flag for follow-up along with your other to-dos. So you can see it all in one place. Oh, I didn't hear back from Johnny, and I'm going to go ahead and email him. And then your next to-do is something else. So I love that app for that.
Todoist. Do you have I don't know. My email got so out of control that I have a VA that I have multiple accounts, and she's tasked with the one that gets hit the heaviest, and there's a lot of crossover. So I feel you there. So Todoist, we'll get that. We'll look that up too, because always looking for different ways to be use the time we have, our most precious resource, and maximize that. Is there any advice you might have for the work-life balance?
Oh my gosh. I'm not great at that. I will say there is something. About 2 years ago, I joined, my husband and I both are active in Rotary. And it was one of those things where I always felt like, I don't really have any time to do that. Yes, I want to be involved and give back to the community, but I'll just have to write a check, right? That's just the way I have to do it. However, I just came into 2017 and said, it will never happen if we don't make it happen. So at the beginning of 2018, we both joined, and that's just a commitment we make, that if you put it on your calendar. So I think if you're looking at work-life balance, it's something you put in your calendar and you say, I'm going to do this, or I'm going to stop at 5 o'clock each day and have dinner with the family. So that's a tip. Not that I'm always great at it.
Pro tip. Well, that was, I suppose, maybe I jumped ahead on my question list. Is that your pro tip, or do you have another one? Something that's actionable right now for that real estate entrepreneur that you might not have already mentioned?
Well, okay. Actionable right now is go check out meetups, right? And go meet people, even though you think, I don't really need to go to meetups. I already have a network. I actually host a meetup here for women who want to invest in real estate. And it's just been, I meet amazing people. And as long as you find a good one, that is one tip I would have. The other thing I would just mention is if you're curious about investing in hotels, I have a checklist that you can go and download and see, okay, I want to just run some numbers and I want to understand what are the things I would look at when I'm looking at potentially buying a hotel in any market. And you can find that on my website, Richer Geek. That's Richer, Richer, geek.com/locker room.
Oh yeah, we'll have that link in the, we'll get that up in the show notes, Nichole. And then real quick before I sign off, you want to just mention your podcast and tell the listeners, what content they can expect to learn from you?
Sure. My podcast is called The Richer Geek. And where does that name come from? Well, it comes from the fact that I'm in tech and I'm really focused on other people that are in technology. And I want to help people who are in these kind of busy, crazy jobs, because technology fails and breaks and it's a weekend and suddenly everything breaks loose and now you're on calls and trying to deal with things globally. Like there's a lot of things that go on in tech that make it hard to imagine how you could fit something else in. And but I do it and I know other people who do. And the intention of the podcast is either I have people who work in tech come on and share their stories, everything from real estate to build, online business to owning a franchise, the full gamut. And I have them explain how they do that while also working full time. And then I do have experts who come on as well, like, for example, CPA or someone who could share 1031 exchange, just so people get up to speed on the kind of resources they would need to be doing some of these things.
Awesome. Well, thanks for sharing that. And thank you for joining me today in the locker room, Nichole. Where exactly can the audience find you if they want to carry on the conversation?
So you can find me. I actually have a contact. My email is listed on my website, therichergeek.com. And you can also find me on LinkedIn. What's unique about my name spelling, it's Nichole, Nichole, Stohler, Stohler. And you'll know it's me because I have my podcast listed in the background as well.
Super cool. All right. Well, there you have it, folks. I truly hope that you picked up some actionable advice from my conversation today with Nichole. Make sure to check out the Real Estate Locker Room Show on iTunes, Stitcher, Google Play. We're on Spotify and iHeartRadio now as well. So hopefully a few of you are tuning in from those outlets. The mission here is to deliver actionable advice and help you raise the bar in the real estate game that you're playing. If you like what this show is all about, I'd be super grateful if you would leave us a review so that other like-minded real estate enthusiasts just like you are able to find us and subscribe. The post-game report show notes, links to Nichole and her podcast and her website will be available on my website, johncarneyonline.com, /podcast. And this is episode number 78. Remember to stay focused on your goals, have fun, and stay in the game. One more time, big thank you, Nichole, for jumping on the Zoom with me for episode number 2 Zoom, all the way from Scottsdale, Arizona. Great spot in the world. I've been there before back in my Phoenix real estate days. I'm your host, John Carney. Remember to say, until next week, work hard, play hard, and raise the bar. Thanks, Nichole. Have a great day.
Thanks so much, John.